Cool. Okay, we're live on YouTube as well. Just double checking with my team. Cool. Okay, we're live on YouTube. Yes, excellent. Good. We're live on YouTube as well. We're live on um, Zoom. We got lots of people, some people joining for the first time, some people here back from yesterday, some people from day one. Cool. Okay. All right. We got people joining from all across the continent. It's super exciting. So today is day 3 of the Get Funded Master Summit. What we covered already, we looked at the 9 areas investors look at in a business. We looked at what impresses investors the most. We looked at the types and sources of funding. We looked at how you introduce your business in one sentence. How cool is that? Then we listened to Lelemba Piri from Enigma Ventures. We also listened to Sarah Dusek from Enigma Ventures yesterday. And then today we're going to listen to Eric Osiakwan from Chanzo Capital. And then tomorrow we are going to listen to Vuisa Kabaka from Hyber Group. Super, super cool. And today we're going to look at where to find investors, what to do to fast track, and we are also going to look at we're going to look at the 10-slide pitch deck. So if you're excited and ready to get that going, type 1 in the chat box as other people are joining in from YouTube. So good to see. Yes, cool. It's good to see all of you back. Excellent. Nice. Cool. Ready. Excellent. And remember to type in the questions that you might have. Type questions in the chat box. If you have any specific questions that you'd like us to answer, just type in the chat box. I'll be happy to answer you and to make sure that you get what you need to out of this session. So I encourage all of you to stay till the end of the session because there's always so much value and these are building blocks. Then also those of you can come tomorrow. It would be great that you come through tomorrow. I know a few people for religious reasons cannot attend Friday evening. That's fine, but we'll share with you the opportunities that we've got today and tomorrow, but we'll continue to teach you. And then you can watch the replay for today and for tomorrow and share this with anybody that you believe would benefit from this. Cool. So my name is Sandras Piri. I'm the CEO and founder of Startup Circles. Startup Circles is a practical business school for entrepreneurs. So the way we teach entrepreneurship is very practical. The traditional way of teaching entrepreneurship, the way traditional schools, the way universities teach entrepreneurship is like trying to teach your child to ride a bicycle using SMSs. You just the text say, hey, balance. Okay. And then like how, and it's the same with entrepreneurship that when you're just reading lots of text and somebody says, yeah, you should go and make a profit. And everybody makes profits in Excel, but in real life, it's very different. So we teach you the practical aspect. The traditional way of teaching entrepreneurship and it was assuming that as entrepreneurs, you starting from scratch, you don't know what you're doing or you're not educated, and therefore give you a lot of knowledge, a lot of information. But now you, the modern entrepreneur, you're coming here not because you don't know, you know a lot of things and you got something going, but you're looking for very specific guidance. So instead of just giving you lots more information, which you can find on YouTube, you can find anywhere, we are giving you guidance, which is removing the confusion to, do I do 12 slides pitch deck? Do I do 30? Do I do 10? What do I put in it? Do I do a business plan? Do I do a pitch? Here we tell you, for this stage of your business, forget business plans. You have to just do a pitch. And then how do you pitch? How long should you pitch? We teach you to pitch in 3 minutes. You pitch your whole business in 3 minutes and people go, I understand and I'm interested. Let's have a longer conversation. Let me invest in your business. That's what we do at Startup Circles, right? Seeing a lot of people are joining. We got more people joining from YouTube. Welcome. Just tell us, if those of you just joining now from YouTube, tell us if it's day one, first time you're joining us, or it's day two, or it's day three. And if you are 3 for 3, big up to you. Well done. This is amazing. Okay. Well done, well done, well done. Cool. So the way we teach entrepreneurship here is just straight to the point, and we cater for you busy entrepreneurs. And then there are so many other opportunities that come out of Startup Circles that you don't get taught by just me. Actually, you get taught by people who are way more successful than me, and people who have built even bigger companies than I have, people who got way more money than me, and they just teach you like how to do that and how to structure your business, how to make a business attractive to investors. And so this is super cool. And today we are going to listen to an investor, Eric. So excited. Cool. You're seeing like people already typing questions. Fantastic. Please type your questions in the chat box. Happy to cover that in the chat. Cool. We'll cover all your questions, the questions that you have, and questions around the programs. And you get to also listen to other entrepreneurs like you who've been through, who are members of the Startup Circles community. And to get the most out of this session, I encourage you to just block out this next 2 hours. Tell people like, look, I'm busy for the next 2 hours. It's game time. Okay, I'm in base mode. I just want to learn and take action, and let them not interrupt you. Then take down lots of notes. Then encouragement is that we start together, we finish together. We're a community. As you can see, there's a lot of buzz, a lot of excitement on our different groups. And well done to everybody that has joined the different groups that we've got and sharing information. Already people are collaborating, and people are already finding partnerships and working together. That's amazing. That's what we want. So entrepreneurship doesn't have to be lonely anymore. That's why we build Startup Circles, that you're not alone. Okay. Cool. What were some of the key things that you learned from yesterday? What were the key things that you learned from yesterday? Please share that in the chat box as well. It's good to see what you've learned and what you're appreciating. Thanks for sharing that. Cool. Thanks for sharing that, everybody. And so today we will go into the 10-slide pitch deck, okay? And we'll break it up with the other information that you need to know around what investors want. And then also we listen to game changers. So these are people who have been part of the circles, like they're in the inner circle, and they have made changes in their businesses. Cool. Why are we doing this? People ask, like, why is Startup Circles doing this? You're doing this, giving all of this for free? Why? What's the catch? Okay. So the catch is that we actually believe in you, and we believe in entrepreneurship. We believe that if any of you succeeds, you are going to change other people's lives, and you're going to grow your economy, and you're going to grow And when you grow, we grow too. When you grow, your community grows, other entrepreneurs grow as well. So that's the beauty of it, that we believe that a rising tide lifts up all ships. If you are winning in Kenya, we're winning in Uganda too. We're winning in Zambia, we're winning in Nigeria, as we're winning all of us in Africa. And this is fantastic. That's what we believe. Then also, we are going to make an invitation to some of you who think like, you know what? I just want to be one of the game changers. I want to change my life as well. I want to be successful as a business person. I'm tired of just playing small and I'm tired of just spinning, like just running around and not achieving my dream of getting more time, having more money. So when we're starting out as entrepreneurs, we're thinking that I will be an entrepreneur so I can determine my own time, right? And those of you who are super early, you realize like, oosh, it's difficult. You haven't yet determined your own time. And same thing with money. I want to be an entrepreneur so I can determine my own money. And then you start out and then you go broke, right? And then it takes time, or it's looking like there's no light at the end of the tunnel. So if that's you, you're at the right place. You're at the right place. There are people who are looking for you. People want to support you and sponsor you and invest in you and cheer you on. And so welcome. You are at the right place. That's why we built Startup Circles. Okay. Then the other reason that you might want to consider being part of the circle is so that you know that you're not crazy. Okay? It feels crazy sometimes, and you have an idea and you believe, and you want to do something amazing, and people don't believe you, or you're not seeing the results that you want. So you're not crazy. Your dreams are valid. Remember your dream. Remember why you're doing this, and you can make that change. But it doesn't work automatically. You have to put in some work. And then if you've been putting in work and you're getting the results you're getting, maybe it's time to do something differently this time. Okay. This is time to do something differently. Cool. All right, let's see some of the things that people learned and from yesterday. Ben Tachi said traction over ideas. Yes. Kireoped said traction, 9 aspects investors look at, as well as the one line pitch, the minute pitch. Yeah, it's a one line pitch. Augustine, aka, I got a fantastic pitch and would want to know how I can get funding as well as the conditions of payment. Great, you will get an opportunity to pitch. Everybody who gets onto our programs gets to pitch, and yeah, and then you will know, you get feedback what you need to work on to make sure that your business is investable. Tabi Nanu, create value and let opportunities come to you. Vision needs financial returns. Jan van der Berg, from yesterday, we learned that we as entrepreneurs talk too much. Yes. Cool. But how can I access the right funding for my business? Cool. If you're in the right circles, you get to know the different types of sources of and different sources and types of funding. Cool. Solomon, 9 areas investors look at. Cool. Okay, there's a long post from Anthony. All right, I'll ask somebody to summarize that for me. Anthony, are you able to just put that in one line? Okay, it's too long. In computer language, we say TLDR, too long, didn't read. If it's too long, so we're teaching you how to pitch, right? Like pitch in a sentence. So Anthony, you missed yesterday's session. Cool. So just put it in one sentence, then I can read it and answer it. Okay. Great. Let's see the people on. Yeah, Joyce Zulu, you talked of fundraising launch for startups during the first session. How do you do it? Cool. We'll answer that. Okay. Rita, it's good to see you. Good to have you back. Steven, pitching in a few minutes. Thanks, Edna. Great, great, great. Okay, excellent. Cool. Let's get into it. And today we'll start by listening to one of the game changers. This man is Dr. Chitalu Musonda. He's a PhD in chemistry. He's a man who can make vaccines and makes drugs and all the type of things. Like incredible, incredible man. He went to Wharton Business School and learned one of the top business schools in the world and learned entrepreneurship from there. But when he came back, like it's too theoretical. Let me learn how to practically make things happen. So let's listen to Dr. Chitalu and what his experience was at Startup Circles.
So thank you for this invitation. So I'm the founder of Delta Chem based in Zambia. We produce organic honey. Our method that makes us stand out from the rest is we're trying to use methods that improve efficiency and obviously cut down costs, therefore improving our economics and profitability. All right, so my background is in science. I studied for my first degree back in Zambia at the University of Zambia in biology and chemistry. And then I came to UCT to do my PhD in organic and medicinal chemistry. After which I worked for 2 years at Pfizer in the UK, and then I came to Joburg. I worked for 5 years, and then took my last job at UCT 2013 to 2014. And then I had to leave for family reasons to move to Pretoria. In the process, I'd always wanted to get something going. So as a student, I had something going on the side, besides the scholarship that I had just to make ends meet. And that just continued with me everywhere I went. When I was working, I was something on the side. So after I left work in 2017, besides the consultancy business that I ran on the side, I decided with a friend to register a company back in Zambia called Delta Chem, which was going to focus solely on agro processing. So initially, the idea was to move into chemical products because that's my background. But then the opportunity for honey came along, and we made a 180 and moved into honey. How we got started into the honey business was sort of very exciting, and then all of a sudden, from being at the top with excitement, and then just falling into the ground. And just asking myself what happened. So I got a friend of mine invited me to participate in an opportunity. He was on the business development side of it. Yeah. And I dealt with the finances. I raised the capital that we needed. But lo and behold, we lost the business opportunity and we lost the capital. So I put money into a business that I had no background, totally no background, didn't know how the business operates. I got bent. So the journey took me to a remote area in northwestern province called Mwinilunga. I went as far as close to the Angola-Zambia border. Yes. Looking for suppliers, going through all the suppliers that my friend had given me. Oh, wow. And then, I met another 10 from Mwinilunga, went to Kabompo, and that's where I've established a more solid base compared to Mwinilunga. So going forward, our plan is to have our own beehives. We've got enough land to set up a very big apiary. We've got a team that's got more than 30 years experience. All these guys I met on my trips to Kabompo. And managed to have a team that's got more than 30 years experience in honey, in beekeeping, in producing honey. So that's what I've been doing until, of course, I had a chat with you about Startup Circles. So just prior to my chat with you about Startup Circles, I just finished an entrepreneurship program with the Wharton Business School. It's an online program that was offered over a 4-month period. So I remember I think it was about 3 or 4 weeks to start to finishing that program. And we had a chat about Startup Circles. I was seeing Startup Circles on LinkedIn, but absolutely no idea what Startup Circles was all about.
And before deciding to enroll into Startup Circles, what were some of your biggest skepticism or hesitation?
Here I was thinking, I've just finished a program in entrepreneurship with the Wharton Business School. It's probably one of the biggest business schools in the world, hands down. So I'm thinking, what better, what is it that Startup Circles can offer better than what Wharton offered me on the program? I compare, and I'm thinking, it's a new company, this is an established organization. They probably know what they've been doing the last 100 years better than what Startup Circles, which is just under a year old, would offer me. So I thought I'll just be going over the same things that I just finished going through. And what was more, I had access to all the study material, videos to refer back to if I wanted to understand something better. So I thought I'll just be doing the same things, which was not going to be a very good way to invest my time. Yeah.
And when you got into Startup Circles, how did those perceptions change?
Yeah, so the first thing that made me decide, first of all, to enroll, to enroll with Startup Circles was something that you mentioned. You did say in our conversation that the focus at Startup Circles is not really the theory, but about the practical aspects of business. And when I look back at what I just completed, and not just with the program at the Wharton Business School, but with other short programs that I'd done before, the focus was a lot more on the theory about what you need to do, not really what you need to do, what you need to know about maybe a topic, about something in business. So you get bombarded with all this information. But I remember you mentioned that Startup Circles was all about getting to do things. So getting off your seat, going in the field, doing things, and coming back to report and measure your progress. And that is a really big missing step in most of the business schools that a lot of people, including myself, have attended. The focus is so much on the theory. Nobody cares if you are actually going out in the field to do what you are supposed to be doing, and most importantly, taking a measure of what you're doing.
So that's what we do at Startup Circles, like helping you to work on the things that matter, and that matters to your specific business. And I'm glad that you did the work. You are a very educated man, very intelligent man, but extremely humble as well, that you just take in the feedback and take notes and go and do the work and come like, this what I've done, or what do I do here, and then just go back and forth. For me, it was amazing to watch and seeing like how you just take that in and put it into practice.
I believe in the theory that we can learn from everybody, regardless. It doesn't matter what your background is. It doesn't matter what you know. It doesn't matter what you've done. It doesn't matter where you've been. There's always something you can learn from the next person. And for me, I know, because of my background, my very technical background, I know my shortcomings on the business side of things, which is what I've been trying to get into the last 2 years. I learned, one of the most important lessons I learned was that when you start a business, you don't always need money. You don't always need outside money to get your business off the ground and get it running and profitable. Also, the timing is very important, the timing at which you ask for the funding. So you ask for funding too early, you're giving away your baby, most of your baby at the very early stages. I didn't know all of those things. The only important thing to me was being able to raise capital and getting started. Being able to raise capital, I mean, most entrepreneurs want to start big. That's why we all go out and ask for money, because we want to start big and make an immediate impact. But I learned that you have to start small because you're going to make mistakes and the chances of failing are high. So rather make mistakes very early on. And if you fail with small losses. I've learned other skills that I didn't. Well, I've got other information that I didn't have before, and I've used the information to my advantage. I've got new skills, surprise, surprise. I've got basics of graphic design, so I can design my own labels. I'm actually doing a label right now.
Oh, nice.
Thanks to Startup Circles, I don't have to pay someone $100 for a label that takes me a day to make anymore. unnecessarily complicated like your logos. I can help people. I help people with their CVs. The contemporary formats which look very aesthetic. If I hadn't come to Startup Circles, I wouldn't have had that knowledge to begin with, and I wouldn't have those skills. But most importantly, if I need to make money on the side, I can use those skills and charge people for the services. It actually saves me a lot of time, not just money. It saves me a lot of time having to do some of the things myself.
Yeah.
Like labels, graphic designers won't tell you they've got 5-6 jobs on the tables. But with my new skills, I can do it on my own. If something is very pressing, I'll just dedicate my time and make sure I have it done or by a specific deadline. I've gained information which I'm going to use to my advantage the rest of my business life. If I need to raise capital for any other projects in the future, I now understand and know the language that investors want to hear. What sort of details you need to present to them, what sort of details you need to leave out. So it's just not for this specific purpose, but in the future, if and when I need to raise money for any other venture, from investors particularly, I'll do it much more ease. And if I have to apply for funding, my application content will be very different to what it was before. Before I joined Startup Circles, my understanding of things was, from a technical background, was you answer things the way I would answer in a technical document, but it's very, very different the way you'd answer in a business document. But eventually it all makes sense that this is business, this is not science. But this is the language you need to speak. It's very, very different.
You're right. Like, we've got a lot of people complaining, saying, you don't give us enough time to explain what a business is about. We got somebody in the last application who got very angry to say there wasn't enough space. Right?
Yeah. That was my first. My first, actually, when I got my feedback was, I was given so little space to explain something in terms of the number of words that I could have put in. And yet I was being asked to provide a lot more information. You can only know that once you've been through the process.
Exactly. Yeah. Because investors are looking at hundreds of applications. Can you explain what your business is in one sentence?
Yes, very important. You need to catch the attention with your very, very first sentence of your paragraph.
Yes.
And if you don't, everybody's going to be lost.
That's right. And what would you say to someone who's considering joining Startup Circles but is on the fence right now?
I would tell them, don't waste your time. Forget everything that you've learned. Humble yourself. You're going to do things that are very different from what you've been doing. You're going to learn so much more information, and you're going to get opportunity to network with people from across the continent, different backgrounds. They're going to give you feedback which no one has ever given you. So please don't waste time. I'm glad I made the journey. It's changed my life. It's changed my thinking. And it's going to change everything that I'm going to do business-wise. So I would encourage anybody interested. I'm not sure if you go beyond Africa, but anyone across the continent should be doing this, because I know, coming from my own background, it's very difficult for people in Africa to pay the sort of money that Western countries demand. But the fees at Startup Circles are very beyond affordable. They're very, very affordable. If you really care about the business you're doing, it's an investment whose return is 1,000,000% back. So I would encourage anybody to join Startup Circles.
Hey, Sarah, so nice to...
Thank you for this invitation. So I'm the founder of...
Cool. How cool is that? Right? How amazing is Dr. Chitalu? He's built something that's incredible, like doing business in Zambia and South Africa, and he's been running now for a while, and he came to Startup Circles after going through the Wharton Business School program, and that has been incredible. To have somebody like that. Cool. Now I'm so excited. We have Eric. Hello, how are you doing, Eric?
Hi, Sandra. I'm pretty good. How are you?
Fantastic. I'm very well, very well. Looking
Yeah.
forward to your session. And yeah, so by way of introduction, Eric uh, is an investor from Chanzo Capital, and Chanzo Capital focuses on the kings, which is like Kenya, Ivory Coast, Nigeria, Ghana, and South Africa. And he's going to share some insights around what you need to do as an entrepreneur, but also please type your questions that you have for Eric in the chat box. So Eric, I'll leave it up to you, and you can share your screen, you can share your presentation.
All right. Thank you very much, Sandrine. And it's a pleasure to be on and to be part of this interesting meeting, Get Funded Summit. And I'm trying to share my screen. You got to allow me to share the screen from your side.
You do that. Okay, we lost Eric. We'll get Eric back on. Cool. Let me give you. Cool. We can see your screen. You're on mute though.
Okay.
And Eric, are you in Ghana or Nigeria at the moment?
I'm in Accra.
Oh, fantastic.
Okay, does it work now?
Yes.
All right. So generally, I'm going to
we
go
can
to a few
see
slides.
it's in presenter mode, so we're seeing all the slides.
Okay, so
cool, fantastic. Yes.
Okay.
Thanks a lot.
All right. Okay. So thanks a lot, Sandras, for inviting me, and pleasure to meet you all. I'm just going to go to a few slides around, how to raise money for your startup. I'm sure that over the last 2 days, you've gotten quite incredible presentations from the other speakers. So whatever I'm going to present is to add to that. So I'll go for 20 minutes, and then I think I've blown 5 minutes already. So I'll go for 15 minutes, and then we'll reserve 10 minutes for questions. As Sandra said, I run Chanzo Capital together with 3 of my colleagues. We have an office in Accra, Nairobi, and Johannesburg. And we primarily have invested in the King's countries, which is Kenya, Ivory Coast, Nigeria, Ghana, and South Africa. So a lot of this is sort of a bit of, from our experience of, doing this since 2013. So a bit of introduction is sort of, raising money, it's an art and not a science. Generally, building a company is a science, but raising money is a little bit of a different form, which is an art. In other words, the way you raise money is a little bit different from the science of building a company. And so as an entrepreneur, you have to be able to multitask. In other words, you should be able to engage in the science of sort of building a company, and then the act of being able to raise money to make the company work. And the act of raising money starts with relationship building. And relationships are important. Generally, as you may know from your life, your personal lives, you always are able to give money to somebody you have a relationship with. Once in a while, you may see a stranger and you're able to give them money. But Rarely do you do that. Most of the time, if somebody walks up to you and it's somebody you know, with a family friend you went to school with, you know from the neighborhood, it's easier for you to part with money. So the first rule is that you need to understand that relationship building is important, and relationship building takes time, right? And relationship basically leads to trust, right? So when you have a relationship with somebody, they trust you. And so if they trust you, then, you know, they can do things for you. So, but to build that relationship, you know, generally it takes time, right? So I always tell entrepreneurs that the best time to raise money, therefore, is when you don't need it, right? So you see how the chronology works. You know, you have to build relationships that are the basis of trust. To build that trust and that relationship, you need time, right? And so, and the time really is when you don't need it. And so when you start building a company, you need to also start thinking about how do you build relation with people that may invest in what you're doing. And you will see that as you go along the line, how that relationship plays out in the early stages of raising money. The fifth thing is it's important for you to also outline the kind of investors that you need. In other words, when you're building a company, you have a value system that you engage. So it's important for you to also think about that in terms of who you're going to bring us on as an investor. So in that regard, you don't need to take money because it's offered. A lot of the time, entrepreneurs tell me, oh, Eric, if I don't raise money, my company will fail. So anybody who offers me money, I should take it. But I have a lot of anecdotal experience of entrepreneurs that have raised money from the wrong investors or the wrong people, and their company also failed. So the same way that if you don't raise money, your business could fail, the same way if you raise money from the wrong people and on the wrong manner or using the wrong instruments, your company could also fail. In other words, it's not just enough to raise money. You have to do it properly, the same way that you build your company to succeed. And finally, don't raise more money than you need at any time. A lot of entrepreneurs come to me and they say, hey, Eric, I just started this idea. This idea looks like Facebook, and Facebook is worth 50 billion. So my idea is like Facebook, so I'm worth 50 billion. So can you give me 100 million now? Right? If I give you 100 million now, then I own the entire company, right? So the lesson there is that, yes, you may be building something similar to Facebook, but you are not Facebook. When Facebook started, if you go and read Facebook's story, you know, it was a company that started with zero. At a point, it was somebody's idea. And they raised a little bit of money, and then they built the product, and then they tested it, and then it was working. Then they raised a little bit more money, and then on and on and on. And today, they raise money in the billions. So it's important for you to understand that the money raising process also takes time, and you have to raise bits at any point in time to prove the business model. And that's why it's important for you to understand the various elements that you need to be able to get a business going. And that is the essence of the next slide, which is sort of, so what do investors look for in accessing the company? So traditionally, if you look to the right side of the screen, there are three main circles that generally investors pay attention to. The first is product. So most of the time, when you're an entrepreneur, you actually build a product to solve a problem. But in today's world, there's so many products solving the same problem. So the question becomes, in an investor's mind, how unique is your product? So you need to think about uniqueness as an entrepreneur when you're building your product. The second is the market to monetize. And here again, the important thing to understand is that it's not enough to say there's a market for my product, but you need to be able to show that you can monetize that market. i.e., if you're an entrepreneur in Lusaka, I expect you to be able to tell me as an investor that Lusaka has a population of, let's say, 5 million people, and I live in a neighborhood that has 500,000 people, and I'm going to first sell to those people. I can capture 10% of that market and hopefully 20% of Lusaka, and then the whole of Zambia, and then the whole of SADC, and then certain percentage on and on and on. The problem is that a lot of entrepreneurs start by saying, oh, I'm building a product that looks like Google and it's going to be a global game changer. And there are 3 billion people in the world. So my target is 3 billion. Yes, by all means, you're going to reach a 3 billion people or 5 billion people as the population grows. But you need to be able to show where you start from and build up into that 3 billion. And it's important that that is clear in your materials or when you're talking to investors. The third thing that investors look for is the team. And most of the time, team becomes sort of the pivot on which the other two rest, because it's the team that creates the product and it's the team that goes out to monetize the market. So as an entrepreneur, you need to be able to show the investor that either if you are a sole founder or you're a co-founder or you have an initial team, that team is a quality team that can execute. So in other words, it's not enough to say, oh, I have a team, you know, my friend from high school is part of the team. Meanwhile, you're trying to build a software product and your friend from high school is an architect. Yes, great. He's got great background. He's an architect. But how does he help you achieve, you know, the product you're trying to build? Okay, he may be an architect, but maybe he has a software background. He may be an architect, but he is able to sell. So he's the one that goes out to sell the product. He may be an architect, but he's the one that has a software experience as well, so he can write the software. So you need to be able to show the quality of the execution team and what role they play. Now, these three are generally the core, and team is really what sort of most investors sort of at an early stage, because at an early stage, you really don't have anything to show, right? So an investor is looking at whether you can execute. And so in Chanzo Capital, we have something that we internally we call execution risk. Is that at an early stage, you are taking an execution risk. And so you are looking at how that risk is minimized by the team. And so it's important for you to be able to show that either you as a sole founder can start it, or you have a co-founder, or you're going to look for a co-founder, or you're going to build a team to work with. And that's very important. Now, in the middle of team, I also put time and tenacity. Recently, timing has become a critical element in decision-making for investors, because it's not only enough to have a unique product, but the timing is critical. Because a lot of the gig economy businesses that you see, Uber, Facebook, Lyft, etc., these businesses were not new ideas. You know, if you take Africa, you know, new companies like Flutterwave, Paystack, etc., all in payment. But payments has been done by banks, you know. But they have come with a different, unique product, but they got the timing right. Their timing, the rightness of their timing is in the digital economy that is creating across Africa. And so they are leveraging that timing that people want to go online. People want to be able to purchase online. And then the final thing is tenacity, being able to have staying power. You know, entrepreneurship is hard. It's not for everyone. So if you cannot, you know, if you're not made for it, don't do it. But, you know, in Africa, being an entrepreneur is harder. So it's important for you to have the ability to persevere. And that is a very important skill that will make you succeed in Africa. Because if you don't give up, over time, your timing will come into play. So sometimes you may not be the right timing, but if you stick around long enough, the timing will work out. So tenacity is really one of the things that we look at in Chanzo Capital as a way to determine how we back a company. Then to your left is sort of the three things that we provide, right? So we generally provide capital. We also provide capacity and community. This is what we call our Chanzo execution strategy, which is that we don't only write you a check, but myself and my partners, we are all guys who have built companies before in Africa. So we have quite a breadth of capacity and a breadth of community networks across Africa. And we also have offices on the ground. And so when we invest, we bring these elements to play. And so other investors also do it differently, but that's sort of our execution strategy. So now you ask me, so what are the various types of investors, you know, that I need to look out for? Now, this, you know, outline I have here basically also follows the path that you take in terms of the various stages that you need to raise money when you're building a company. So the first money you need to raise is from angel investors. And that is mostly what we call seed capital. Sometimes some people call it pre-seed or post-seed. You know, there could be 2 or 3 rounds. But generally, when you have an idea, the first capital that you need is angel investment. And generally, the idea of angels is people who take early stage risk, you know, without even knowing what you're trying to do, but just listening to what you have and the idea. And they are called angels because, you know, they come from, they take an extreme risk, you know. And generally, they fall in 3 categories. They are families, friends, and the last category is fools. Now, if you look at these 3, the first 2, family and friends, you see that there's a relationship there, right? So the first people that most likely will invest in your business is your family and your friends. Why? Because they have a relationship with you. So remember my first slide about relationships, trust, and timing. So at an early stage, when you want to raise angel money, you most likely go to these people. Why? Because you have a relationship with them, because they know you. So if you go to them and say, hey, you know, I finally want to start a company, your family members know you. They know that, okay, you know, John is a hardworking guy. He's been in corporate, or he finished school, he wants to start something. That is why your family, your uncle most likely will give you some money. Your dad may be, your sister, who maybe works in the bank and has some money saved up, you know. So family will most likely be the first people to back, or your friends that you went to school with, you know, your neighborhood friends, your friends that you went to school with. So they are the first people. And then the fools is a category given to people that you may not necessarily have a relation with. Remember, I told you that sometimes, you know, you give money to people that you meet because you believe in what they're trying to do, but you may not have a relationship with. So rarely do you sort of get the fools. But yes, from time to time, you may get people that you don't have a strong, you know, long relationship with, but you may meet them, you know, and, you know, you hit it off and they may take that risk. But they are very rare, you know, but they're in that category as well. So you raise angel money to basically build the product, right? And in the tech world, we normally talk about a minimum viable product, which is sort of a product that somebody can, you know, use, play around with, and then pay you for it, right? MVP, minimum viable product. And so it's important that you always have in your vision that when you raise angel capital, you at least want to be able to come up with a product based on that capital that you raise. Then you go to the next category, which is venture capital. And the name explains it, venture. It means that that capital is now to help you increase your customers. Remember, when you build a product, you now have some customers. You have product market fit. So the next capital is now to acquire customers. And that is what you need venture capital for. And mostly venture capital firms, you know, have it in their name. So you'll see it in their name, you know, they're called a VC fund, you know, the short for venture capital. And then, you know, as your company grows, you have 10,000 customers, you have $1 million in revenue, and now you want to grow outside the country in which you are. You want to go into multiple countries, or you want to go into, you know, new territories. Then you want growth capital, you're growing the business. So you go to, you know, investors that give you growth capital. And then once you've grown the business and it's generating hundreds of millions of dollars in revenue, then, you know, you want, you know, private equity. Private equity guys normally buy control of the business. So when they come, they generally will like to buy a significant majority of the business. And they sometimes retire the founders, right? And their model is, okay, this business is generating $100 million. We want to make it generate billions of dollars, right? So they have a formula. And normally they want control, and they bring in new management, and they then take the company. And then, you know, after it generates billions of dollars, then they take it, you know, to the capital markets, right? I.e. the Johannesburg Stock Exchange, or the Nairobi Stock Exchange, or the Lagos Stock Exchange, or the New York Stock Exchange, or the London Stock Exchange, right? So that is the cycles that you go through normally, and those are the various investors that you meet along as you go through that cycle. So the next question is, so what instrument do these investors use in these funding rounds? So the first one, the angels, they normally use convertible notes. Now, convertible notes is a simple term to define a loan that can be converted into equity, right? So, because you have an idea and you haven't built anything, most of the time, your family member will say, oh yeah, I'm just supporting you, and they give you a little bit of money, and sometimes you don't even have an agreement, but basically what you're doing there is they're giving you a convertible note. So if your dad, your uncle, your sister, your friend gives you some money, and finally you build a product and it starts working, even if you don't have an agreement, it's important for you to go back and say, hey, this idea is working. I've got 1 or 2 customers, you give me some money. Now, can we agree on converting it so, I give you some equity, right? Most of the time, angels or people who do it formally will then give you an agreement. There's a convertible note that you sign, and the convertible has mostly 3, components to it. It's an amount that they give you. There's a discount on it, and then there is sort of an interest rate, on the money. Or sometimes people normally use the market rates that they have already. But the idea is that agreement doesn't value the business, because it's difficult to value a business when it's just an idea. Otherwise, it will be a tug of war where you say, my idea is like Facebook, so it's worth 50 billion. And then the investor says, well, you are not Facebook, so you can be 50 billion, right? Then there's a big, back and forth. So convertible notes have helped you to avoid that, And then, once you get a venture capital, then they want equity, right? At venture capital means you have customers. So now you can do projections. And if you do projections, you can do a discounted cash flow, and then you can come up with a value. So at that point, equity works. And then when you do get to growth, because the company is now generating a lot of capital, generally growth people use debt, because the company can service the debt, right? And that's where sometimes you can even get it from a bank, because a bank will say, okay, yeah, you're generating $50 million every month. So if I gave you a $20 million loan, you can service it, so sometimes it's there. Sometimes they also do a combination of debt and equity. And sometimes they do a mezzanine, and that's what they call mezzanine, right? And that mezzanine, equity and debt, follows on. So private equity guys use that as well in terms of their mix of capital that they provide. Then I put grants and I put an asterisk to it. Sometimes, at an early stage, you may not get family and friends, but you may be able to apply for a grant. If it's a research project, sometimes some ideas come from research projects, and research projects, you may get a grant. But what is important when you're getting a grant is please read the fine print of the agreement, because sometimes grant providers then sort of put ownership of the IP, intellectual property that you developed, becomes theirs. And a lot of entrepreneurs don't pay attention to that. And so they take the grant money, they build their company, and then, 5 years down the line, this grant provider comes and say, hey, the IP belongs to me. So now that you're selling the business, I own the IP, and you cannot, you do not own that IP. So, by all means, if you want to take grants, please pay attention to the final details of the agreement. So now that you said, give me some framework, I'm going to give you the final 2 slides, the do's and don'ts, just some things that you should pay attention to when you raise it. The first is preparation. Like everything else, you need to prepare to raise money. So in the earlier slide, the stuff that I talked about is part of preparation. But important to have your story. A lot of investors like stories. Why are you doing what you're doing? Most of the time, there is a lot of other things that you could do. You could get a job, you could work for someone, you could do other things. But why did you do this? Sometimes, you started this business because you experienced a problem. A family member experienced a problem, and then you thought you want to solve the problem. So that story is important, right? A lot of entrepreneurs miss out on that story, but that story is a way of connecting with investors. It tells a lot also about what you value, right? And investors want to connect with your value system, which drive the culture of the business. And then, you need to have documents. A lot of entrepreneurs have great ideas, they start the stuff, but they don't document. So try to keep as much document. If it's receipts, keep receipts, keep them, document them. Try to make sure that you have documents to back the things that you say. And then do research, research on the investor. Most of the time, entrepreneurs approach private equity funds when they're at an angel stage, wrong focus, because a private equity guy won't give you seed money. Now you know the various investors. So do some research and know, the investors, know what kind of company investing, the sectors investing, their investment strategy. Most of the time it's on their website, like Council Capital. If you go to our website, you'll see our strategy there. So make sure that you feed that strategy before you approach the investor. Otherwise, most investors will just ignore you or not respond to you. And then approaching investors is important, but it's always good to do it through an introduction. Again, this is where sort of the relationship bit becomes important. So you want to approach me, for example, but you don't, know me, or you don't have access to me. But, you find out in your network that you have a friend who knows me. If that friend introduces you, gives, some weight to that introduction, I'll most likely take it, right? Because I get a lot of inbound, and so do a lot of investors. So most of the time, it's not that investors are difficult, it's just you get a lot of inbound. And so, going through introduction helps. Maybe there's no introduction, maybe an event, like this event, maybe some of you came because you wanted to talk to me. So the event gives you an opportunity to get to meet with me and understand what I look for, and then, that kind of stuff. So it's important to use those channels and other channels to reach investors. And finally, when you, get connected to an investor, it's important for you to, be clear about what you're looking for and your investment process. But I always tell entrepreneurs, be flexible, right? Because, an investor may agree something with you, but, life things happen, things change. For example, one day an entrepreneur, I had a call set up with an entrepreneur, and then, a few minutes before the call, I had a family emergency, so I sent out a message and said, look, can we reschedule? Because I have a family emergency that I need to deal with. And the entrepreneur wasn't, the response wasn't the best, But generally, things happen to people and that kind of stuff. But it's also important you see the investor as somebody who, could have uncertainties the same way that you may have from time to time. So whilst you should be firm and be clear on your process, it's good to be flexible when things don't work. Try to reschedule and try to be accommodative, because it's the same thing with entrepreneurship. Everything in entrepreneurship that don't always work the way you want it to work. Most of you will attest to the fact that the company you're building today, when you thought about it in the beginning, it wasn't the same way you thought about it. But today, you're doing something significantly different because you were flexible. So flexibility is very, very important, even for what you do. So I'll finish with some final don'ts, some things that you shouldn't do, and I say this from our experience at Chanzo that we've learned from a lot of entrepreneurs. It's important not to come across as desperate, but be confident. A lot of entrepreneurs think that when you express desperation, it makes the investor, change their mind or not. It doesn't really do that. What is important for an entrepreneur is to be very confident of what you're building, right? Every investor knows that you need capital to do what you're doing. And every investor knows that if you don't get capital, there's a certain level of limitation that you have. But the importance of your confidence should come from your customers, right? If you've been able to build something that you have 2, 3, 4, 10, 20 customers, that is your confidence position. Because the reality with every business is that you are fundamentally building a business for customers that will use the product or the service you have and pay you for it. So that should be the strong part of your confidence level. Even if you have 10 customers, it's important to be able to say that every investor wants to see that you've built something that somebody's using and is paying for it. Because then I know that when I put money into it, I will get my money back, or I will get a return, right? So projecting confidence is much more important than projecting desperation. And also, don't use unnecessary documents, right? Sometimes entrepreneurs, flood, investors, so much stuff. Always make sure you send relevant stuff that the investor asks for, because a lot of unnecessary stuff, may just cloud things, And then it's important for you to make sure that you communicate in the right time zones, A lot of the time, entrepreneurs, don't do if you do the research about the investor and all that, where the person lives. So that, maybe you don't want to send a message, your time zone is, it's 12 noon, but maybe the investor is in Alaska. So it's midnight, you don't want to be calling the person in the middle of the night. So these things are simple things, but they make a difference, so just keep them in mind. And also try to be as non-intrusive and non-invasive as possible, because an investor gets a lot of inbound, so try to sort of understand those, boundaries and help, and it helps for the investor to see you differently, because most entrepreneurs, sometimes sort of don't pay attention to that. So if you pay attention to that, it gives you a lot of leverage and latitude with investors. And the last thing I say is to always leave some money on the table. And what I mean by this is, from experience, a lot of the time, when you are negotiating with an investor, right, you need to see the investor relationship as a long-term relationship. It's almost like a marriage. right? An investor would most likely invest in your first round, but you want him to be able to bring his other friends to invest in you. You want him to be able to say good things about the business going forward, because other investors will invest because of the previous investor that you have, right? So always try to make sure that you have good relationship with your investor. You may not agree on everything with investors. You may not agree on all the things, just like life. You don't agree with everything with even your brother, your sister, or if you're married, your spouse, right? But you focus on the things that bring you together. So try as much as possible to do that, and don't try to nibble over the little things, because an investor will bring a lot of leverage to what you're doing and help you build long-term relationships. So I think I've done a bit over that 20 minutes that Sandra has given me, but I hope this is helpful, and I'm happy to take some questions. And these are my contacts, if you need them. Thanks. Over to you, Sandra.
Thank you very much, Eric. This is really good. I'll ask some of the questions. Thanks. This is really, really good. Thank you very much. I'm seeing like in the comments on YouTube and in Zoom, and how people are appreciating this. A question from me, like, what are the things that just impress you the most when you meet an entrepreneur? You feel like, oh yeah, I think I should listen more to this entrepreneur.
What impresses me most about an entrepreneur is their value system, right? And you always see that in the way they approach the problem they are solving. And it's also come across in how they build the product and how they deliver the service. And in the long term, that is really what makes a business stand out. And so when I'm talking to an entrepreneur, when I'm doing what I call the execution risk analysis, eventually I'm talking to you as an entrepreneur, right? I spend time with my entrepreneurs, and I'm lucky that I get to travel a lot, and that's why we have office on the ground. We spend time with the entrepreneur, because part of it also is that the entrepreneurship journey is not smooth. You're always going to face a lot of problems and challenges. So an entrepreneur's value system comes to play when things don't work out. How does this person deal with challenges? When the customers are screaming, I will get a sense of how you react from your value system, right? So for me, a lot of the due diligence at an early stage is really about getting to know the entrepreneur and how they carry themselves and how they see life in general, right? And that will permeate into the business they build and how that company culture evolves eventually.
Cool. Another question is from Rita Lolly saying that she is worried about giving you a lot of information to investors. And the worry is that the investor will go off and start the business. Do investors want to start businesses? Will investors steal ideas and steal companies?
Well, look, so, there's some entrepreneurs have had these experiences, where, ideas, but, ideas are a dime and a dozen, and this is very important. Please listen to me. The entrepreneurship game is not about ideas. It's about execution. Any idea you have, probably there are 10 other people that have that idea. The difference is who actually takes a step and execute. Look, companies like Cellulant, Flutterwave, Paystack, Epic Contest, Ampit, Haptel, these ideas are not unique. Everybody will tell you, I had that idea. Anytime a business succeeds, there are probably 20 people who that they say, oh, I had that idea. The difference is who executes. So pay your attention to execution, because if you can execute fast, then you have what they call the first mover advantage. Now, yes, people might have had experiences, with investors, which unfortunate, and as an investor will offer an apology that, like every other creed, there are always bad nuts, So, but not all investors are like that, So you also have to give people the benefit of the doubt. The fact that you had a bad experience doesn't mean everybody's bad. Generally, I believe there are more good people in the world than there are bad people, and everybody has a tendency to do something that may not augur well for you. But generally, you need to be positive, and you need to always give people the benefit of the doubt, and believe that when you talk to someone, you want to obviously be, conscious of your experience, but also make sure that you can be confident and engaged and get the best out of it. But majority of investors, like entrepreneurs, are great people. They are trustworthy people. They are people that are there to help you. And this is why doing research on them is important. Look, one simple research is, if you want to talk to an investor, look for another entrepreneur that they've invested in and talk to that entrepreneur. It will tell you something. If you had a bad experience with that entrepreneur, maybe they may not be together still, and you tell you something. So do your due diligence also as an entrepreneur on the investor before you approach them. It'll make a bit of a difference.
I like that. And the idea of, like, people are different, and they are good people and bad people, but the people in the world are generally good. Otherwise, the gig economy, things like Airbnb and Uber wouldn't work, right?
I mean, you jump into an Uber car with somebody you don't know, right? You trust them. It's trust right there, once in a while, an Uber driver may be somebody bad, but it doesn't mean that everybody's bad, So.
That's right. And I think there's a question from Christine, but it's been answered, because Christine is talking about the recipe for a business, that somebody will steal that recipe. But I think we've answered already that it's execution. You could have Gordon Ramsay's recipe, but you can't cook food like Gordon Ramsay, right? So how do you, there's another question about, there's a question, this is a quick question asking about Chanzo Capital, whether you invest in agri-businesses.
Yeah, I want Solomon Mwako, I want you to do your homework. I'll give that to you as a homework because I already talked about it. So
fantastic. Let's see, another question. Just checking on all the platforms.
So I see Ernest has a question about how long it takes for an application to get funded. Ernest, it varies, anything from 3 months to 1 year or more. It depends. But generally, you should give yourself that kind of window, depending on what stage you are, what materials you have, how well you're prepared, how much you are fit with entrepreneurs. I mean, I've met entrepreneurs that I invested the same day. I wrote them a check before we even had an agreement, because I knew them before, and we've done the background checks and all that stuff. So it varies, but that will give you a bit of range.
Great. Another question is on execution risk. Could you explain that again? Like,
so execution risk is basically the risk of making what you are saying happen, right? So, there's a probability that you may achieve exactly what you say, but there's also a probability that you may not achieve exactly that, or you may not achieve at all, right? And I think the idea is there's a chasm there. And so I am looking at how plausible that is. By the way, execution risk is not a term that I invented. It's a term that has been there for years that investors use.
Great. Chris Simpson is asking, why do investors, mentors find a problem with signing NDAs?
Correct. Very good question. You see, generally, I talked about ideas, right? Ideas are a dime and a dancer. Now, if I sign an NDA with you, and then tomorrow, for whatever reason, I don't invest in your business, and then tomorrow somebody comes to me with the same idea, but maybe that person pitched it differently, or that person is a better fit for me based on my criteria. Immediately, you would then say, you cannot invest in that idea because I signed an NDA with you, or you may sue me, right? So generally, this is the reason that investors don't sign any, because we get exposed to so much ideas. And so, it's hard for us to then commit to signing an NDA. I mean, these are very important tracks. And so the way you do it is that when you engage with an investor, so now let me talk about Chanzo. So what we do at Chanzo is that we normally make an affluent declaration, right? So if you are pitching me an idea and I already have somebody like that, I tell you upfront. Or if I invested in a company like that, I tell you upfront that, look, this idea looks like this idea I've invested in, or I'm talking to this entrepreneur. And then I give you the option to decide whether you still want to tell me about the idea or you want to change your mind, right? because I cannot sign an NDA, but I can do a disclosure. So generally at Chanzo Capital, what we do is we do disclosures to entrepreneurs. And then you can then decide whether you still want to share information with us or you want to recuse yourself.
Brilliant. Thank you. Thank you very much, Eric. What would be some of your final words, words of advice or words of encouragement to all the entrepreneurs who've joined on this call today?
Well, first, I want to congratulate you, Sandra. This is a great event. I want to congratulate you and the entire team, putting this together. To the entrepreneurs, look, entrepreneurship is a marathon, right? It's not a sprint. So when you get into it, it's a long haul and you must be ready for it. And I always tell entrepreneurs, if you don't give up on your idea, you eventually succeed, right? And that's where tenacity becomes the key word that I will leave you with. That keep at it, keep chipping away, you will eventually succeed. But it's important for you to understand that you are not building companies primarily to find investors. You primarily build companies to find customers who use your service and pay you for it. That's your fundamental responsibility. So keep your eye on the customers, don't give up on the idea and keep doing it and you eventually win. And if you succeed with customers, investors will call you. Actually, that's a better way to raise money because every investor wants to back an entrepreneur that is succeeding, right? So if you eventually are succeeding with customers using your product, investors will eventually call you because entrepreneurs have the leverage and you need to keep that leverage.
Fantastic. That's like proper mic drop, really, really good, Eric. Like I love listening to you and I love the work that you've done. Like you are passionate about entrepreneurship, believing in the entrepreneurs in Africa. And this, which I say that why we build Startup Circles, like we want to bridge that gap between investors and entrepreneurs. And what you're doing, showing that commitment to say, hey, here's the answer sheet. Okay, just do this. Then you're going to pass, right?
And I think that's what you are doing with this event. And that's why I'm happy to be part of it, because I think it's good that we're able to get entrepreneurs to understand the things that we look for. And that way, the gap closes up a little bit and it's easier and life is better because eventually we investors don't have a job if the entrepreneurs don't succeed. Yeah, really, the entrepreneurs have the leverage. So I'm always happy to, share and help entrepreneurs in that regard.
Fantastic. Thank you very much. And thank you very much for joining us today. Wakanda forever. Excellent. Thanks, Eric. And so you can visit Eric's website, which is Chanzo Capital, or Chanzo Capital, and then you see what they look at, like the answers to some of your questions, saying, what does Chanzo Capital invest in? What do they do? Where are they? And Eric explained, saying, for every investor that you find, just do a little bit of homework. So it's chanzocapital.com. Just look at that. And when you do your homework and you prepare your pitch, Eric is there. So again, something that we've done at Startup Circles is to make it easy for you entrepreneurs who are executing, right? Like Eric said, like the ones who are just making things happen. There are investors who are willing to listen to you. And at Startup Circles, we make the introductions easy. So a lot of investors do not take unsolicited pitches because they receive too many of them and they have no time to start vetting each one. So at Startup Circles, we do that vetting. We create that funnel and say, hey, you are in Ghana. Eric is there and is looking for this, but you also need to do your work. So fantastic. Thank you very much, Eric. Type 1 if you found that useful and found that valuable. And as a thank you to Eric, type 1 in the chat box. It's super cool. Awesome. Thank you very much. And thanks. Now I am going to talk about the 10-slide pitch deck. We are going to talk about the 10-slide pitch deck. This will help you to put your ideas in one slide deck. So somebody was asking to say, what's the difference between a business plan and a pitch deck? So a business plan is good for big companies that want to now open a new division or a new market. They have something a little bit more proven, and they can put together a business plan to say, hey, this is what we're looking at, that's what we're building. And it's a big document, lots of research that goes into it. And big corporates use that. But because entrepreneurship hasn't really been taught in business schools, and because a lot of people who want to finance you didn't really know what to ask for, they'll ask for your business plan. But for us in Startup Circles, we believe what Steve Blank says and Eric Ries and the Lean Startups talking about, you don't need to create a business plan, because at this point, at early stage, first of all, a lot of you don't write your own business plans. You hire somebody to write the plan, but also the business plan is full of stuff that you just done on the computer, very some out of touch with reality. And Steve Blank says that no business plan survives first contact with the market. So everybody makes money in Excel. Everybody is rich. Like, yeah, I haven't seen anybody give me a business plan that was making a loss. Okay. So everybody is making money there. But instead of writing a huge document that just has a lot of guesses, hypotheses, we teach you to just write a, we teach you to write, to create a pitch deck. So a pitch deck is shorter and is straight to the point, but it emphasizes also your traction, saying, what have you done? What have you created? What proof can you show that you can make this happen? So the pitch deck is straight to the point. It's short. People can read it very quickly. And at Startup Circles, we actually teach you to pitch in 3 minutes. So people have, now all of you can create pitch decks. We teach you how to do that. And then you can all pitch in 3 minutes. 3. And you can all pitch in one sentence. So you can pitch in 15 seconds, in 1 minute, in 3 minutes. And so we will teach you all of that, and then so that you can win, right? And so let's go to the pitch deck. Are you ready for the pitch deck? Type 2 in the chat box if you're ready to look at the 10-slide pitch deck. Yes, let's do this. The 10-slide pitch deck. So the 10-slide pitch deck is a build on to the 9 areas that investors look at. So we've looked at a lot of pitch decks in the world and put together the best ones, that like collected the best pieces from the different ones to make sure that you can pitch your idea completely, not completely, like just people can understand your idea and say, wow, I'm interested. I know what you're doing or what you're trying to do, and I want to have further conversation. So the pitch deck is to help you pique interest. So a lot of times I've been invited as a guest at demo days, some of them where people are pitching for 30 minutes. And at the end of 30 minutes, I'm still like, what does this company do? I didn't get that. Like, what are you doing? Because people, whilst they're brilliant, they do not know how to communicate their brilliance and what they're working on succinctly, meaning clearly and in a short format. So let's do that. The first slide is the name of your company and your one-line pitch or simple description of what the company does. That's your title slide, okay? And there on the title slide, don't put in things like all of your websites and all of that, those type of things. And remember that you would have 2 types of pitch decks. You have two decks. One deck is for presenting in person, and another deck is the one you can send to investors when they ask for it. When they ask for it. Very important. When you're talking to them first time, just put your one-line pitch. When they ask for your pitch deck, then send your 10-slide pitch deck. And the one that you send can contain a lot more text. The one that you pitch in person should have less text because you're talking through it. You want them to listen to you more than just reading stuff. Don't make it look like your lecturer's presentation in class, which is boring. Like they just pick a page from a textbook and put it in a slide and start reading sentence by sentence. Like, That's why people hate PowerPoint, because of the people who just lift a page and put it in PowerPoint. It makes it super boring. So you can make your pitch deck come to life by having more pictures, less text, and then you talk through it and tell a story, like Eric was saying. So the second slide is your problem slide. Here you define the problem, the need you're solving for, and for who. And you can use a story to frame this, which also connects with your values, saying why you're interested in this problem. The problem sets the stage for your entire pitch. It must be the problem your product solves. So here you're not saying, I am solving unemployment. If your company just helps people to write CVs, just say, I help people write CVs. Because if you write CVs, for instance, you're not creating new jobs. You're helping people to get jobs or to write CVs. Those people who couldn't get a job because they couldn't write CVs. So you are not creating jobs. You are helping people get jobs. Okay, so just be very clear and related to what you're offering. Then your solution. Describe how you envision to solve the problem you previously shared. And also at this point, it's important to say, why now? Why this is the right time for this? Like, oh, because of COVID, now is a good time for my solution, or whatever. Remember here that your solution is not your product. Okay, your solution is just how you solve the problem, how the problem gets solved. And then your product is the method in which you deliver the solution. I'll say that again. Your product is the method in which you deliver the solution. Okay, so you can say the problem is struggling to lose weight. Okay, not losing weight. The solution is consume less calories. Then the product is, like, how do you make people consume less calories? Like, oh, we feed them cabbages for 1 month or for a year, or we give them this protein supplement that has less calories, or we give them this, whatever you do, that's your product, but the solution is consume less calories. Or it could be trying to lose weight. Our solution is burn more calories than you consume. And our product is an exercise bike, or something that burns more calories while you're sleeping, or, like whatever you do that just delivers your solution. Okay. At this point, if you have a technical solution, you say what it is. So you can say my solution is a website, it's a school, a system, whatever it is that you are building that solves the problem. Then on the market slide, this is where you show how big the market is. And there you have your total available market, your serviceable available market, and there's serviceable obtainable market. So total addressable market is just like how big the whole market is. Okay. And then your serviceable, talking about the ones that are in your specific segment or specific area that you're looking at. Then your serviceable obtainable market is the ones you can realistically capture. So remember that your TAM is a vanity metric. So if you say there are 200,000 entrepreneurs in Africa, we just want to know how big your market is. We know that it's not possible that all of them will be your customers. Okay. And the mistake that people here make is 1% of China. Say, oh, there are 1 billion people in China, and we're just going to get 1% of that. There are 1.2 billion people in Africa. We're aiming to get 1% of that. Like, no, you need to simplify it. And another mistake that a lot of people make is saying, I am in food. Everybody eats food. Therefore, everybody is my customer. No, not everybody eats the food that you provide. Okay, so if I'm selling Milli Meal, not everybody eats pap, sima, ugali, all of those things. Other people eat pasta and rice and different type of things. Same thing, if you're selling vegetables, not everybody eats vegetables, and not everybody eats those type of vegetables. Same with meat, chicken, whatever. So make sure you go really deep there. Okay. And then your revenue model. This is usually overlooked. People say, oh, we're going to have this. We got 1,000 users. Say, how are you going to make money? Oh, we'll just monetize the users. What does that even mean? You just monetize them, turn them into money. Like how? You need to say how you're going to make money. And you need to think about that depending on whether you have an existing business or you're starting out. When you're starting out, always think commercially how you make money from the get-go. Don't try the Twitter model. Everybody's saying, no, no, no. Like Twitter, we just have lots of users afterwards to figure out what to do. Like TIA, this is Africa. We're looking at revenue. We're looking at amount of money you're making and whether you can make money or whether people can pay you. And even that model is not working in Silicon Valley anymore, where people are looking at the companies that just had valuation on valuation on valuation based on users and they might make money in the future. Now the VCs are noticing that that's a house of cards. Like there's no real value because the company is burning cash, but you're saying it's valuable. And then those companies are forwarding back very, very quickly. Okay. Then in the revenue model, we also look at your unit economics. Like what is your revenue? What are your costs and what's your margin? This is also very important because some people say, look, when I sell, I'm selling, my revenue is $1 million, right? But you can make $1 million, but your cost could be $999,000. That's not good. Or your cost could be 1.1 million, meaning you're making a loss. So it's important that if you say I'm making 1 million, we want to know that your costs maybe are 100,000. Meaning, if you're selling something even for $1, how much of that dollar is yours? Okay, it could be $1, it could be $100 or 100 million. How much of that is yours? That's the unit economics, and very important to do. Then traction. Those of you who've heard me talk about traction many times, please type traction in the chat box. Traction. Traction is evidence that your business is going somewhere, okay? That you can execute, that you are the one who can make this thing happen. You're just not a talker. Africa has many talkers, okay? We are looking for doers. So traction proves that you are a doer and you're not sitting with an idea for 2 years, afraid that people will steal it and you're doing nothing, okay? So traction says, look, this is what I've done. And I've made so much money, or I am making some money, or I've got these people who are waiting for me to produce this and buy. So they've given me, there's a wait list, they are giving me their contact details and they're saying they're going to buy, or I've got a letter of intent, or I've also traction, which is good, is to also be, I've learned this and I've learned this and I'm getting closer and closer to knowing what my customers really want. And it also traction could include your licenses, your approvals, your MVP. That is good. That's what you do for the traction slide. So this is the most important slide. It's one that convinces people that, well, this is not just a story. And that's what excites investors. Then there's the competition slide. You can use two methods of doing that. There is the power grid and there is the magic quadrant. In the power grid, you can you list who your competitors are and then list the benefits. So people like to use the magic quadrant, but the magic quadrant is too simplistic because you're just evaluating companies on two factors. Say expensive, not expensive, faster, slow. And like we are fast and not expensive. Like that's not good enough for somebody to compare you to others who also claim to be faster and inexpensive, for instance. And then something to note here is that being cheap is not a great competitive advantage, especially if you're starting out. It might just mean that you're putting a lot of money on, leaving a lot of money on the table. It could also mean that that your business might not work because you're not making enough. And find out why your competition is expensive. Okay, and then it's also important to see why your competition have succeeded and also why they keep failing, right? So not to just always think that, hey, I have found a gap in the market, okay, and you get excited, I found a gap in the market. But the bigger question is there a, you say that I've found a gap in the market, but the bigger question is there a market in the gap? Okay, maybe that's why nobody's there, because there's no market. Like that location, in your city where there's always a new restaurant, a new bar, or a new store, like every 6 months, there are new owners because the place doesn't work. Okay. That's what you do on the market slide. And important to note, you always have competition. So some competition might be indirect. Then the team, like Eric said, this is very, very important. It shows the, the experience, expertise, the ability to execute, to say, can this team really make this thing happen? And if you've got your own proven track record, it helps people believe that you can execute. Then the last one is your investment ask. Here you state how much capital you're raising, with what general terms, and what milestones do you want the investment to help you reach. This is very important. So you don't just say, I'm looking for money for operations. Like, no, it's not inspiring. And because we know that companies that don't have like a target that want to reach just will burn the cash and will still need more money, but they haven't moved anywhere to a point where they could raise more, or they are breaking even. Then you also need to say how you're going to use the money here. So this piece, we talk about it a lot, but people still get it wrong. Just say like, oh, I'm looking for 1 million. What's the 1 million for? So it's for operations, or a business just needs money, or I have put in so much money myself, so I want to start getting paid. Investors don't want to pay you to do your work. In other words, they're not trying to incentivize you to start working. So they want to pay you to help you achieve a goal. So they are not paying you for the work you put in the last 2 years, 5 years. No, they're paying you now so you can execute faster on what you already been executing on. Very, very important. So those of you who are going through this, and those are startup circles that get feedback on this. And then also you can also ask for too much money, and other times you ask for too little money. So when you ask for too much money, investors get put off. They feel like you don't know what you're talking about, you don't know what you're doing. I've had people come to me saying, I'm trying to raise $50 million. 50 million, like, yeah, what do you want to do? Say, I want to build this military robot that you can just send to war without you can send it to war and it's on. Like, okay, have you done that before? Like, no, I've just been thinking about it and I read something similar. Like, okay, and you want the 50 million, and other people have said, I want $1 million to get my idea off the ground. Like, no, like, there are levels which you the amount of money that you ask for. And when you're asking for a little money, and just to cover the activities that will take you to the next step, it's more inspiring for investors. And don't worry that I asked for too little, therefore they'll give me little, then I won't be able to build something. Investors don't want to fund you to nowhere. So they will they'll build a financial model with you and see that, okay, I think you actually need more. When you say I need more money, then they'll give you more. And then it's more around how much value is there and what percentage of the company would they have to take. And then if you're asking for too much, investors, essentially you're giving away like 100% of your company if your company hasn't got much value. And good investors don't want to take more than 30% of the company too early, and they want you to continue staying motivated. But that depends from investor to investor. Cool. All right. So now let's look at what makes a business produce massive returns and what determines the value of a business. These are two things that I think Erica touched on it, Lelemba touched on it, as well as Sarah touched on it. So it's a market size. So market size of what you're really providing, saying how big is this market size, and not too general, but more of, oh, okay, there's still a larger portion of the market that we can capture. and then it can produce like 10x results, like 10 times the returns. Okay. And then the other one is your EBITDA, your earnings before interest, taxes, depreciation, and amortization, which is really just your net income, your net revenue. They want to see how much money do you make after your initial costs. Okay. And with that, it determines the value of your company. If your company is not making money and you're saying, I've got revenues of 5 million, and then your EBITDA is tiny, the overall value of the company is tiny. So these are the two things to consider. But we go really in depth with this, and you will see and understand it in our premium programs. Cool. All right. Continue to type your questions in the chat box. All right. Continue to type your questions in the chat box. And cool. So 10x, so that, which means 10 times. X is times. So saying 5x or 2x is like 2 times. So can you generate the income which is a multiple of the investment? That's what investors look for, saying, can you grow this too? And the shortcut. Now you got insider lingo. You can say 5x, 10x. Okay, that's what you do. All right, cool. Now we come to the part where we showing you how you can fast track. Okay, how do you fast track? How do you fast track? You fast track this by one way. First of all, is like you can do this on your own, right? If you want to grow your business, and like Eric said, you are building a business. You're not building a business in order to raise money. You're building a business to serve your customers. Okay, you're building it to serve your customers, and you're building it to just to grow it and to reach your dreams. And raising money is a method of helping you do that. So how do you do that? So some of you right now, I think you felt like, wow, this is so much value. I'm ready to go and do this on my own. Please, by all means, do it. And then we'll have the replays of this program, the 3 days and the 4 days and tomorrow's session as well. And so please come back tomorrow. We have more things we want to show you and teach you, like around how to actually make this happen. But people have been asking, like, how can I get started? How can I join Startup Circles? How can I get to fast track this process? And we wanted to make the invitation to you tomorrow, but people saying like, look, I am Jewish. I'm not attending on Friday, but I want to know. I'm ready to get started. Other people say I'm Seventh-day Adventist. Others people say I got a birthday party. Others say, I got plans for Friday. Can you tell me already? I'm ready to go. And I will share with you what we've got. We've got an invitation right now for some of you. Okay, this is not for everybody. Okay, those of you who want to get started with us, there's an invitation. So there's an invitation to join our 2 premium programs at Startup Circus. And these programs, first of all, I must say that this is not for everyone. Okay, it's not for everyone. In fact, those entrepreneurs that tend to get results from this program tend to have the following characteristics. They are very serious about achieving their business goals. They believe in themselves. They take action, and they tend to focus on results over explanations. Okay. And the program that we're inviting you to is our Investor Readiness Program. And we got 2 Investor Readiness programs. One is for existing businesses. And the other one is for early stage and aspiring entrepreneurs, the ones who are thinking about entrepreneurship, or the ones that have launched but they're not making money. So there are 2, because the existing business one, we focus on very specific things that just help you to be in front of investors very quickly. So those who have existing businesses, if you get to pitch, you can pitch to investors as soon as next week, for instance. And then those who are super early, because you don't have traction, will take you through some steps that will guide you through to get the traction. So our aim is to empower you today. You, the innovators and pioneers of tomorrow, the game changers. The program equips you who think big with the resources you need to bring products and services to the world. The aim is to get you and your business investor ready within 90 days, but don't wait for the 90 days. It's within the 90 days. There are some, depending on what level you're at, some get investor ready within a week, others it's a month, others it's 2 months, others it's 3 months, others take longer. And still, after this program, you are all eligible to pitch to investors at any point. So you don't even have to go through the Shift application, by the way. If you just go through any of our programs, you automatically get to pitch to all our investors. In this program, you will learn how to powerfully summarize your business, and you get feedback on that, like the one-line pitch, how to develop a relatable and powerful value proposition, how to pitch like a pro. Okay, there is a skill, like Eric was saying, there's a skill and there's a way. Pitching is an art. So the same way you feel like people like Trevor Noah, they're talking like they're sounding like they're just ad-libbing, that they're just speaking. They practice, they train, they prepare. So we prepare you to pitch and sound natural, but also to make sure that you can pitch in one sentence, you can pitch in 15 seconds, you can pitch in 1 minute, you can pitch in 3 minutes. Then also helping you to understand your finances. Like, what are your unit economics? How does your business make money? And can you make more? What are the levers you need to pull? And then also how to accurately size your market. Okay. So what you will learn is you're going to build an incredible business, a business that generates revenue for you. So it turns, so that again, it becomes a valuable business for you. It starts making money for you. And like it's been said throughout the program, throughout the summit, is that a business that generates money is actually more attractive to investors. So the less you show you need money, the more likely you get it, and the more you need money, the less likely you're going to get it. So you will learn how to develop a winning mindset. As I mentioned already, that the successful entrepreneurs surround themselves with other successful people, and they are always in the presence of great people. So you'll be surrounded by other amazing entrepreneurs who are building great companies and they're on a roll. Then you'll also be surrounded by investors and founders who are guiding you to say, I like this, but just show me this. Like, oh, cool, do this and do that. Okay. You also learn how to avoid the many pitfalls that rookie entrepreneurs fall for. How to demonstrate to investors that they'll get the return if they invest in you, and if they invest in you now, right? And how to shortcut that process in terms of, sometimes you have people who are not serious, or investors who are just also waiting, and they just keep asking you for stuff so that you get tired because they're not interested in your business. So like, what do you do in a case like that where you're just being asked for things that are not making sense to you? Okay, we teach you how to handle that. Then we'll teach you how to demonstrate that your idea has a lot of potential, how to calculate your how big your business could be, because one of the questions that you get asked is, how big could your business be? And a lot of people then say it would be big. It's like, huge. Huge is not a good answer. Big is not a good answer. It's more about show, don't tell. When you show how big it is, then people actually, when you show them, they'll tell you that, wow, this is big. Okay. You also calculate your EBITDA. You significantly increase the size of your addressable market. And of course, doing that ethically and knowing the key metrics investors want to know about your business. How do you determine your big picture? How do you polish your elevator pitch? What type of traction you need in your business? And those of you are feeling like, but for me to start, I need a lot of money. We help you break it down into small pieces that you can start without money, that prove that you are a person that executes. Okay. How to know which investors to choose, how to think like an investor, and what makes investors want to invest in you. Okay. So the goal of this program is to transform your business into a company that's valuable, sustainable, and investor ready in the most effective and most time efficient way. We'll do this in 4 ways. One, you learn how to build a valuable business. Two, you learn what investors look for. Three, you learn how to deliver an impactful pitch. Four, you get in front of investors every month. So the program structure is 90 days of rapid learning and implementation and progress, practical, accessible lessons, expert advice from seasoned entrepreneurs and investors, regular investor pitching, and then your weekly schedule. How it actually works is that on Mondays or Tuesdays, depending whether you're in launch or ignition, you get to have your the tutorials where we looking specifically at your business and what you're struggling with. Then and you get to pitch on Friday or Thursday, where you do your pitch practice and then you update on traction. So we hold you accountable to traction. We've had people have traction in a day. Okay, we teach you, like, because sometimes people complicate how to get traction. Say it's simple. Tomorrow, pick up the phone, call all the people that you believe could buy from you, and see what happens. And in a day, somebody says, "Oh my gosh, for the first time, I've actually sold to 4 people, compared to the whole time that I was trying to figure out all these complicated ways of doing this." Then you also have office hours where you have one-on-one with other mentors who are like way more qualified than I am, way more successful. They'll teach you and they give you guidance on your business. That's in office hours. Then there's group coaching, and then every month also you automatically become you join in this in the events where we have international guests. We have had amazing people. Then there's Q&A and investor demo day. Then the other thing that you're going to get is you're going to get lots of credits, by the way. Okay, so before I talk about the credits, the most important thing, like, through this curriculum, what you're going to get would be self-paced online content, which is valued at $1,497. That's the value. Then coaching and advice through tutoring sessions and live office hours, which is valued at over $1,497 as well, over 60 days. Then pitch practice and feedback, that as well is worth over 1,495. So all of this is that so much value that you're going to get out of these programs. And then the monthly investor demo days, valued at over $3,000. And what you've seen, that the people gone through our programs and they've pitched, they've done that. People like Kaylee raised $25,000 after paying for one of our programs. People like Michelle went through our programs also. She's raised $285,000. And people like Candle Life also, Lele to raised over $25,000. And people like Mark and Lauren, they raised $25,000, but now they are going to raise more. They are getting their second round of investment. So the total value of the program is over 7,488. Nowhere else do you get such a comprehensive and integrated program backed by experienced entrepreneurs, investors, and world-class business mentors. So the $7,488 is a conservative estimate of the cost of separate programs available elsewhere. Now, how much is an MBA? Right? The MBA I did was $20,000. And yeah, I got a piece of paper. I still couldn't run my business. But here we say, look, join this, and you get your certificate of completion. As a school, as Startup Circles, as a school, you come to this school. When you succeed, you actually get money. But that's not like the main aim. The main aim is learning how to raise. But if you do it and you have enough traction, you actually raise immediately, which is super cool. It's super cool. All right, so there is no catch. I'll show you about the price now. And then if you're doubting, thinking whether I should do this now or should I do this now, what's the trick and how much is it? How much? People are asking, like, how much? Okay, let me take you through this. How much and what is it gonna? What's your investment going to be? in this program. Okay, let's see. So I talked about the all the different programs that we've got. We got the two programs that we've got. One, both of them run either for 3 months or for 6 months, and you all have 12 months access. And these are some of our mentors already. You have Mompotam Chelemba, who's built a company which got acquired by SAP. You got Simon Stockley, who founded SA Home Loans. It's an incredible entrepreneur. Ariel Simaruk, CEO of Conversion Science. Nicole, who works for World Remit in London, and Tyrone works for Skywalk Innovation. So all these people are way more successful than I am, and they build bigger businesses than I have. And these are the people you get to learn from. And then also you get the different investors who give feedback. Some of the investors you've met throughout this summit, but also you get to pitch to them and also learn from them. And they are looking to invest. So that's the difference, that at Startup Circles, we don't have judges. We have investors, real investors looking to raise. Okay, so what you get is all of this personalized learning from experts, world-class coaching and mentoring, investor readiness score, meet the investor sessions, weekly pitch practice, and a community of like-minded entrepreneurs. Now, here are some perks, the wonderful things that you're going to get. You will get Amazon Web Services credit. All of you will get Amazon Web Services credit and of $5,000. But if you get investment, that increases to $50,000. So when you have money, more money is given to you, right? And then Freshworks give you $2,500 worth of credits, and then HubSpot gives you $8,000 worth of credits. So we love these systems. So the Ignition program, like I mentioned, is for existing businesses, and the Startup Launch program is for aspiring and early stage entrepreneurs. So what is the price? This is the price for the Ignition program. The Ignition program once off is $1,295. And if you pay for it in 3 installments, it's $479 per month in 3 installments. Or if you want to go, you're saying, look, I want to spread it for 6 months, and then you join the 6 months program, it's $259. But all of you, as a reward and as a congratulations for joining joining the summit, you all get a 15% scholarship, which is that amount discounted from your the amount that you're supposed to pay. So if you want to buy once off, you get the 15% scholarship. You only pay $1,100. And this applies to all the payment plans. So why we're doing this is because when people say, look, I can't pay the full amount all at once, but I want to be a student of your school. How do I make it happen? Then for the Startup Launch program, that's the price for the launch program. Once off, it's $895, and then you get a scholarship of $134, and then your once off investment is $760. And then if it's 3 installments, you only pay $322 a month for 3 months. Or if you want to take it for 6 months, it's $152. So the good news is that just for you being here, you get this opportunity to join and be part of the circle, to say, look, I want to accelerate this and I want to make this happen. And once again, it's not for everybody. Some of you feel like, look, I've gained so much knowledge already from all of this, and I could just Google the rest of the stuff. That's perfectly okay. But those of you who say, like, you know what, I want to just do something different now and just also change the people I learn from. So all the mentors and entrepreneurs and educators or startup circles have built companies. So you don't get taught by somebody who's just drawing a salary and just drawing a salary and saying, hey, go and teach entrepreneurs. And they start asking you like, what are your 5-year projections? Real entrepreneurs who have built companies know that at this point, when you're just starting out, you don't need to do 5-year projections. We want to see how you're doing now, but you have a vision and a plan for the future. And that's what we're going to do. That's what we do here. Okay. So that's your early sign up bonus. All right. And then this is the invitation. The programs are open. The program is open. Just check the links in the chat boxes sent by my team. You are free to join our program. So let me show you some of our guest mentors. How cool is it? Like you have somebody like Steve Blank joining you on the program and learning from the man himself who wrote the Startup Owners Manual, right? Like just having conversation with Steve Blank is super, super inspiring. And Startup Circles is heavily influenced by Steve Blank. Steve Blank taught Eric Ries, who started the Lean Startup movement. So Eric wrote the Lean Startup, and Steve Blank emphasizes get outside the building and says don't do business plans, talk to people, iterate very quickly. And what we practice we teach Steve Blank's methods at Startup Circus. Andy Raskin, another legend from Silicon Valley, somebody who teaches you storytelling. Like, how do you create a story that people would actually listen to and believe and get moved to raise money and buy from you? And Andy is somebody that we've had the privilege of chatting with. This is Sriram Krishnan. So Sriram has worked with 2 unicorns. He helped grow Tinder. Okay, he helped also grow Spotify from 6 countries to 60 countries. So 2 companies are worth over $1 billion. Sriram, when he's talking about capturing lightning in a box, he's like, what? Like, wow, that's amazing. Okay. And then Nia Ayal wrote the book Hooked. It teaches you how to create products that people love to use all the time. Like when you get up in the morning, you check your WhatsApp, you check your Instagram. Why do you do that? You check your Facebook. And Nia breaks that down and it teaches you how to create products that people love to use all the time. And of course, one of my favorite humans, DHH. So DHH is the co-founder of Basecamp, and he is also the creator of the programming language Ruby on Rails. How many of you know Ruby on Rails? So DHH created this, and we had a conversation with him in December. He was one of our special guests, and that's what we do at Startup Circles. So I will address some of the questions that are coming in, and if you have any other questions around the program, please type them in the chat box. I'll be happy to address them. And so let's see, some of the questions are around the price. Okay, say like, oh, for me it's too expensive, it's too high. This is a question that we got now, and some we get that a lot. But think about the amount of money you've put into your programs already, into your companies already, and how much is your company making right now. And then if you did invest some money to move your business and learn the skill that you're going to use, whether you're trying to raise money or not, and you're trying to build a bigger company, how much would that be worth? So if what we teach you in the Ignition program and the Launch program helps you secure an investment of $50,000 to $1 million, like some of our past students, to help you take your business to the next level of productivity and profitability, would the amount that you're investing now make a difference? Okay, that's the question. Like, with the amount that you're investing in right now, if you're putting in $1,000 and you have the chance and you know how to raise 50,000, is it worth it? Okay. And then some people are doubting themselves, like, look, I'm not very sure if I could do this. But if you're serious about wanting to secure financing for your business to help it achieve its goals, and you have doubts whether or not you'll be successful, you'll be very pleased to know that in this program, we work on your mindset as well as your skill set. And we teach you things around developing a winning mindset and also what you need to do on a daily basis or weekly basis to just put on your your game face and get into beast mode and get things done. And we all know that entrepreneurship is hard and it's got its ups and downs, but we just help you. When we start the sessions, we talk about our wins, which helps with the mindset to just count all the things that are working. Okay. And another question that people ask was thinking like, will this work for me? The strategies and tactics that we teach at Startup Circles will work in any free market economy in the world. However, if you feel that your circumstances are unique, please just let us know, and we can chat with you and we'll discuss your situation with you to see like, okay, how can we help you? Or is yours really, really, really a difficult situation to make it happen? Okay, so other people ask like, okay, is this a trick? What's the catch? There is no catch. There is no trick. We are a serious business school. We are new and we've gained so much momentum very quickly. Startup Circles was registered as a company only recently, but has helped us. It's got entrepreneurs and students from over 50 countries. We started last year and we've had over 100 people go through our program, and 5 of our entrepreneurs have actually raised money. And we have also got investors, which is super cool, meaning it works. There is no catch. We are a serious business school with international students being taught by experienced entrepreneurs, professional investors, and world-class business mentors. And we like to deliver exceptional value to our clients. So is this a better option than any other option? From our perspective, other options will cost you significantly more, but they're too theoretical. You go to another business school, it will be too theoretical. You come out of there and you still can't run your business. Okay. This program is practical, integrated, holistic. You get feedback all the time and you get personalized feedback. So another question somebody asked is that, should I do this now or can I wait? It's up to you, really. It's up to you. Like how long do you want to wait before you start making things happen in your business? Or maybe you feel like, okay, from what I've learned from all of this free stuff you've given, I'm good to go. It's up to you as well. That's good. But our recommendation is that you do this program now. If you have an existing business and you want to raise money for it, this is the right time. And then also, if you want to launch or you've launched, but you're not making money, you've built apps, you've spent money there, which is like way more than what the program costs, and you want to change that, this is the program. These programs are for you. And provided that you do not have any like pre-existing commitments that will make it very difficult or impossible for you to participate in the weekly or monthly sessions, we recommend that you start now rather than later. And the discount that we're giving you is for 5 days only. It's not forever. And then those of you who've been on the program and the ones who've been on the program, we know that because we're getting more and more demand, you see like how many countries are on this program right now, the price keeps going up. So because we want to make sure that we have like just the right people and they get the best value for the time that they invest in this. So it's a limited offer and the discount goes away when we close the cart and we start the program. So, and then those of you are thinking like, look, what if this doesn't work for me? What if my boyfriend, my husband, my blesser, my girlfriend, my wife says no and changes her mind? If within the first 30 days you feel that this program will not advance your business or is not for you, we will refund you. We'll give you a full refund and it will be swift and full. That's what we do. So to secure your seat for the next class, all you need to do is click on the links in the chat boxes, or you go back to the concierge page, click on that and complete your order. Upon completion of your order, check your email and you receive your own unique personal access credentials to the program. You also receive a receipt, and then you get started on the program, and then you will join us on this special journey. Those of you who've got a lot of made a lot of progress already, we will do a bonus session for you. A welcome session. As soon as you join, those who should join very quickly, we won't wait for 5 days. We'll give you a bonus session next week where you will get to learn to pitch so that you can pitch to investors within the week. Okay, that's what we're going to do. So another question from Chifudo Shamano. Roughly how many hours a day do I have to commit once I join the program? Chifudo, you have 2 hours on a Monday or Tuesday where you join the tutorial, and then you have 2 hours on a Thursday or Friday where you get feedback from all the other mentors. Then the optional times are times if you want a one-on-one, which is office hours. And so the time that you have to commit to program would be 4 hours per week. And then you now need to commit some time to go through the content that we have online. That could be 1 hour a day, 1 or 2 weeks. But after that, it's just putting into practice what you've learned. So the time that you'll be spending is actually working on your business. And so we ask you, like, tomorrow, spend 2 hours making sales, and those sales are yours. You're selling your business, you're making money for yourself. So that's what we teach you. Okay. Chifundo saying, if I can start in June, will I still have the discount? Unfortunately, the discount goes away. It goes away in 5 days. Okay, so it goes away in 5 days. Cool. Another question from Esther Ringquest. Does the 3 or 6 months option have set start dates? Yes, all the programs will start next month. I'll double check with my team like exactly when they start. Yes, all of them start next month, and then they'll run for 3 months, and the other ones will run for 6 months. But you all get to pitch to investors monthly, and if you move very quickly, you might get the money sooner. But also, you just learn how to pitch and to create a valuable business sooner. Cool. Cool. A question from Refilway. It says, on your website, I saw the start date for this cohort starts on 30th April. When is the next one, and will the 15% scholarship still apply for the next cohort? No, the 15% scholarship won't apply to the next cohort. Actually, yeah, that's the date when the program starts. But I'll just double check if, yeah, the program starts 30th April. I'll check with Christy. I'll check with my boss. Cool. The discount is just for people who attended this, which is you, and then the people take action now, because this really is a scholarship. It's provided by our investors as well. Say, look, we want to make it easy for people who want to get started, and maybe they want to learn just how to pitch and get into the pipeline. Then we'll give them the scholarship. Cool. Rita Lolly saying, if I decide to start the Ignition program, I want to spread the tuition through 6 months. What is the start date? The start date is, the one I've got is 30th, but we just double check what the actual one is, but it's 30th April. So you can start, if you want to take advantage of the discount, get started within the next 5 days. If not, you lose that discount. Okay, cool. Let's see. Any other questions? Can partners sign up for the training? Yes, yes. You can sign up with your partner. So it's per company. So you and your partner, it's the same amount. So don't worry about it. So if you got 2 partners, it's the same amount. Okay. Cool. Any other questions that I've missed? All right. We've gone over time. Thank you very much, everybody. And let's see. I just want to make sure that I've caught all the questions. Cool. Just double checking with my team that I've got all the questions. Another question that one of the frequently asked questions is somebody saying like, but you know what, this is it's a stretch for me. What happened to me personally, my business made a turn, a massive turn, when I actually went into a program which was a little bit of a stretch for me. I had just finished my MBA. I was broke, like completely broke, thousands of dollars in debt. And I quit my job to run my company full time. And we had moved from Cape Town, we went back to Zambia. I wasn't working, I was trying to build a business. My wife was now MD of a company called Love Zone. And at that point, just said, look, there's this other program. There's this wonderful program. I know I finished my MBA, but there's a wonderful program where I really believe it will teach me how to build a company as a startup and make it work. I said it's in Bali, Indonesia. Bali, Indonesia, and it's gonna cost uh, it's gonna cost $8,000. What? Like what? We just spent already 20,000. Now we want to spend extra 8, and then we add in the flights, accommodation, all of that type stuff. Is this the right program? And we looked at it like, wow, this is good. I need this, but almost like a chicken and egg. Like I need money to make this happen. But again, this is the program that will help me make money. And I had to make some changes. Like, what are the things that really matter to me? So my business matters. So I dedicated my time and money to that program, and it made a difference. When I came back from Bali, I hosted the Zambia the Trust Awards, which is a new concept. We invited the president. I had like the vice president there. We had the heads of companies like MTN, Post Newspaper, the banks, all of that coming to an event which I put together because of having spent time in a program that was like mind shifting. And my mentor then and learning there recommended that I join Startup Grind. And from there, that's when like the things changed. And my work now, I've been to over 22 countries. I've worked with over 1,000 of entrepreneurs and speaking to 10,000 of people in one place. But that changed when I made that decision. Because if I continue just getting free advice, like people I meet just giving me advice, like, oh, you should do this, you should do that, I was going to continue to get the same results. So it had to be a little uncomfortable, but I made that shift. Okay. So I'd encourage you, if you're really thinking about starting your business and moving it to the next level, this is a program for you. Priscilla is asking, when you start a business in a very small scale and you want to look for investors, where you categorize the business, startup or what? Yeah, if you're just starting out, we just call it early stage startup. So at Startup Circles, we're not too concerned about terminologies, right? Like SME, small business, SMME, or SMB, or startup, or we just say, are you generating money? Are you not generating money? If you're not generating money, you are early stage. If you are thinking about starting, you're aspiring. So early stage and aspiring, they get into the startup launch program. Then if you are an existing business, you're generating revenue, and now you want to raise money and you grow faster with other people's money, you are an existing business. Okay. Cool. Any other questions? Now, my question for you, is this like a bad time for you to get started and make this change? Okay. To join a program like this. And I'd like to see, just out of interest, show to see who would think, who's ready to get started on this program. Like type 1 in the chat box if you feel like, yeah, I want to get ready to join this program. Believe that these programs will help me build my business, move my business to the next level, and I want to be one of the game changers. Just type 1 in the chat box, and so we know there's people saying like, yeah, I want to do this now. moving it to the next level. Fantastic. You got Emmanuel Udo on this side, and then see on the other side. Yeah, yeah, cool. Oh, it's a question from Hannah Bungwa. Do the programs have age limits? No, they do not have age limits. They do not have age limits. Um, anybody can start. We had people who were very young, like 19, start the programs, and other people have retired during the program. So there is no age limit. Awesome, Sarah Amani, thank you, thank you. Yeah, cool, James, thank you. All right, it's good to know that people want to get started on this. That's super cool. And then in closing, I just want to show you some of this, some of the things that we do with our game changers, right? This is as with like a few of our entrepreneurs, startup circles in Mauritius. We went on a tour, went on this trip. It was good, a nice retreat, and we lots of learning, lots of fun. And this well, we were in the ocean, having a good time there. And then we also last year before COVID hit, we went to Silicon Valley on a tour. We went to Tesla, to Google, we went to Harvard, we went to Stanford University, we went to UC Berkeley. We went to like so many amazing places. So it was so inspiring to have all of that. Cool. Fantastic. It's good to see people ready to get started. Joyce Zulu, Edna Semiti, Yusuf Samaila, Eleanor Kwachie, Rita Lolly, Tendai Nkoma. Excellent, excellent. So we look forward to having you on the program, and then we look forward to seeing you again tomorrow. Those of you who can make tomorrow, please come through. Those of you who can't, watch the replay, and then my team will guide all of you who got some further questions. Just post your questions saying, look, I still have a question around this. But remember, the summit is still going on. Tomorrow we have Vuisa Kabaka from Hyber Group. He invests in East Africa, West Africa, Southern Africa. Really, really incredible man that you don't want to miss. So looking forward to seeing all of you again tomorrow. And then take a note of the ones that are ready to get started. And if those of you say, look, I need also to just find out and talk to my partner, by all means, please do that. For me, my wife was tired of me not making money, always saying, look, I'm an entrepreneur. One day things will change. He says, no, things need to change now. You know? I was like, just using up her money all the time. And so I got onto the program, and it made a big difference for me. And then just to think about it, you will be taught by Sarah Dusek herself. She will teach you. Lelemba Piri will teach you. You have Jake Dusek will teach you. And these are amazing people who build amazing companies. They will teach you on this program. Then we have the other guests that come from big companies, the other mentors, they will teach you. So when I look at my team, I'm the least qualified to teach anybody. So that's why I would encourage you to join the cohort and join Startup Circles, because it will make a big difference for you. And every month we'll put you in front of investors that are looking to invest. So thank you very much, everybody. Thank you for joining us. Thank you, thank you, thank you. Just note if there are any further questions. Cool. I'll just take note if there are any other further questions that I missed. But thank you very much, everybody, for joining us today. Let's see, we've got lots of people here. Thank you, Adiola, Sebil, Blessed, Chifuto, Chinyere, Cletus, Christophers, Emmanuel, Udo, Joshua, Kanklejo, Greopete, Priscilla, Sandra Jere, good to have you. Sarah Amani, Simply Sibs, Trader NG Platform, Vincent Edigini. Thank you very much for joining us today. Excellent, excellent. Awesome. And thank you to the Startup Circles team who've been working tirelessly putting this summit together. Thank you, Christy. Thank you very much, Vupe. Thank you very much, Ndalumbu. Thank you very much, Marjorie. And thank you very much to the Enigma team for making this possible. Thank you, Sarah. Thank you, Jake. Thank you, Lelemba. Thank you very much, everybody. So we'll see you, and then on the people on YouTube, Leslie, thank you very much, Yusuf, Ransford, Joyce, Bella, Gabakila, Jide, Stephen, Mfundo, Greg, Rose, William, that's more. Tumiso, Luengo, thank you very much, everybody. Victor, Stephen Emeka, thank you very much. Rita Lolly, thank you very much. Chris, thank you very much. Good to have you back. Obulom, thank you very much. Julian, thank you for joining today. Cool. Eleanor, Yusuf, Siso, oh, fantastic. Yeah, Siso got investment from Eric, and I know Siso, I met him in Ghana. Nice, thank you very much. Daniel, Julian, excellent, excellent. Thank you, everybody. Please type what has been your key takeaway. Key takeaway. Thank you very much. Key takeaway for today. Just type that in the chat box and we end. Thank you. We'll see you tomorrow, same time for the last day. We want to see who's gonna do 4 of 4. All right. 4 of 4. Today, some people have done 3 of 3. Awesome. Thank you very much. Goodbye, everybody. We'll see you. See you tomorrow. We got Vuisa, so don't miss that. Cool. All right.